question is, someone still needs the health care. And even if the funding has been reduced, if you get sick, you still need to go to the doctor who's going to pay for it. You might have to come out of pocket more to compensate for that service, but you can't ignore the service. I think that's largely what's being missed here is the absolute stickiness of the need for healthcare. So let's take a look at some of their financials. I've got the balance sheet up here. So in March of 2025, March 31st, 2025, they have $34 billion in cash and short-term investments, $27 billion in accounts receivable, and other current assets of $35 billion, rounding out a $63 billion current asset pool that they can use to run this business as they see fit, quarter in, quarter out. That's a tremendous amount of money. Long-term investments, $51 billion, and other long-term assets, which is probably going to include goodwill, $161 billion. Total assets, $300 billion we're talking about. Now, costs, liabilities. What do they have? They have Medicare cost payables. That's what they have to pay out, $37 billion. That's a whole lot less than the $100 billion they have in current assets. They've got short-term borrowing, $9 billion, and other current liabilities, $66 billion, for a total of $113 billion, slightly more than the current assets they have in cash. That is pretty decent if current assets can cover current liabilities. Long-term debt, $71 billion, other liabilities, $19, and then we got a $100 million equity slug, rounding out the balance sheet and equity section of the balance sheet. So there's not a lot on here